In Asia, the pools of capital, the AUM of those pools of capital, of pension plans, insurance companies, of governments, is increasing dramatically and at a very steep elasticity, so that we can expect to see quite a significant volume of capital coming from that part of the world very soon and very quickly. At this particular point, the real spearhead is focused on government capital, pension capital, insurance capital. And the regulators allowing alternatives to be an integral component of the portfolio structure and allowing globalization in terms of accessibility to those assets is quite critical, not only for the way that we look at where the capital will come for what's raised on a global basis for us at this time, but also domestically, where that capital is able to really kind of support the growth of the asset class domestically. The question I have is, how will they be able to deploy? And the interesting thing is they have three areas of access: primary, secondaries, and directs. And so the question will be how they will mix the three to be able to achieve their targets. Because the objective when you allocate 5% to alternatives is you need to be as close to 5% as possible. And if distributions are coming back fast and furious, that money has to be redeployed. So I think the community in and of itself is going to start promoting itself a bit more, travel a bit more, work with consultants and advisors to access pools of capital. These new programs that are moving, because they're using a combination of primary, secondary, and co-investor directs, are actually cutting those J-curves down to like 3 years. So it's really amazing, the ability to penetrate and position. So their impact is going to come a lot sooner and quicker than people realize.